please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. You're watching Power Breakfast on CNBC TV18. Now back home on Dalal Street, the market ended on a positive note for the second straight session, marking a continuity in the upward trend that we saw for the March series. That started off, in fact, in Friday's trading session. The major indices, they closed with gains of close to around 1% each, with the banks outperforming in trade with a gain of close to around 1.5%. And important to note that yesterday, for the second day running, the institutions were net buyers because the DII buying offset the FI selling. Anisha, tell us, global Q is positive, so that's pretty good news. Your take on the markets?
Well, yes, it looks like the global cues are supportive, and that's the reason the initial tick on the screen would be in the green. We were suggesting a 60 points uptick when we saw the SGX Nifty last. But other than that, the Dow closed 400 points higher, just 3%, 3.5% off the 52 weeks high that we had seen earlier. Now, this was led by the industrial giants of 3M as well as Boeing. Even Berkshire Hathaway, the Warren Buffett company, did well in trade yesterday. The S&P and Nasdaq both closed 1% higher in trade. The US yields also slipped a bit intraday, though by the end of the day it was around 2.86 level that we saw on Monday as well. So no major change coming as far as the US yields is concerned. If you look at the European markets, well, they also all ended in the green, up anywhere between 0.4 to 0.5%. Actually, CAC up around 0.5%, and the DAC and FTSE up around 0.4 and 0.6%. As Nigel was talking earlier as well, the political developments in Germany suggest that the German incumbent chancellor might be set for a fourth long-term session. So that as well might kept the stocks in focus there. Other than that, as far as Asia is concerned, when we started off the show, Nikkei was holding with a gain of around 270 points. The last time I checked, it was over 300 points gain that we saw. So a quick lap of around 40-30 points is what Nikkei had done. The SGX Nifty suggesting a 55 points uptick. Other than that, as far as the Straits as well as the Taiwanese index is concerned, they were also showing uptick of anywhere between 0.3%, etc. If you look at the domestic cues, well, the GDP and core industrial data is expected later this week, and that might remain in focus. Other than that, there will be assembly polls for Meghalaya and Nagaland, something that the political scene will keep an eye out on. Other than that, this is going to be a lot, stock specific today, given there is a lot of news flow when it comes to the headline indices. Fund flows, as Nigel was also talking about, the FIIs continue to be net sellers. They have sold around 1,120 crore as far as the cash market is concerned, but the DIIs, they have pumped around close to 1,400 odd crores, and that is what is balancing the market. Important levels to watch out for the Nifty, the 20-day moving average is around 10,615. That's a level to watch out for. Probably in the opening tick itself, that might be get taken. Other than that, on the Bank Nifty, the 20-day moving average is around 25,861. 300 points from where we ended yesterday. So that is another level to watch out for, Nigel.
Well, the technical level is going to be very, very important. As Anisha said, even on the Nifty, I think we're looking at the 50 DMA at around 10,620 odd. But Anisha, tell us, what are the stocks we should be looking at?
Well, first of is PNB. We were thinking that the total alleged fraud will be of around 11,400 crores, but now we understand, and that is what the PNB has informed the exchanges as well, that it can increase by around $200 million. So that will be in focus. Other than that, the key headline today is ACC and Ambuja, wherein they have kept the merger on hold as of now. They say they are not proceeding with merger as of now. There are certain constraints in implementing the merger, but the merger remains an ultimate objective. Now, Credit Suisse says that synergies have been a bit delayed and it is a bit of sentiment negative. Maybe we'll see that reaction coming in today. HDFC Bank, well, they're also a bit of technical glitch is what they're continuing with. Remember, there was a security breach of data, and they are saying that they're working closely with SEBI to figure out what happened and how they can improve the processes. Simbhaoli Sugar, they say that in relation to the fraud case registered by OBC, the company is in process of submitting the information and clarifications to the investigation agencies. Let's see whether this lends any support to OBC, because that stock yesterday was down about 10-11%. M&M, they have collaborated with LG for a Leo Bio battery technology to support the EV revolution in India. JN Irrigation, they have invested in one of the subsidiaries in Belgium. That will remain in focus. IOB, they have approved a preferential issue of shares to Government of India for around 4,700 odd crores. So that clearly will remain in focus today. Music broadcast, wherein Radio City and Apple Music have launched a new show. LT Foods, wherein CRISIL has upgraded the long-term rating. Sagar Cement, where they have approved acquisition of Hydel Power assets, just around 27 odd crores, but might just see a bit of reaction. Other than that, Berger Paints will also be in focus as the company is considering putting up an integrated plant at Lucknow. They're working out the details in terms of capex, etc. But clearly, Berger might be in focus on account of this. The major headline today is ACC shelving the merger plans with Ambuja Cement. They say that there are constraints in implementation of the merger plan at this juncture, though that remains the ultimate goal. Nigel, take us through the details and what does it mean for the stock movement today?
I think both stocks will be in the red just to kickstart trade. Anisha, well, if you just take a look at what are they saying? They're saying that they're not proceeding with the merger as of now. In the future, yes, that's the ultimate objective going ahead as well. And there are various constraints in implementing this particular merger. Now, if you just take a look at it, what could have really gone wrong? Remember the MMDR, that act, that's the Mining Act, that came into play in 2015. Now, if you're changing the ownership, that will require that you pay some money for using limestone from someone else's mine. So, for example, if they're merged, then Ambuja Cements would have to, pay a particular amount as royalty to use the limestone from ACC's mines, because that's the way things work. So that could amount to nearly around 60 rupees on a per ton basis. So that could be the problem really, but they've not mentioned that. So we'll just go with that. In fact, this merger is not going through for now. They're saying, but they're looking at optimizing costs. They're looking at various synergy benefits. They're looking at purchase and sale agreements between the two, and that's what could lead to some synergy benefits going ahead. What they're saying is that, in fact, remember they had set up in 2017 May. They had confirmed a CNBC TV18 story that yes, we're looking at a proposed merger between the two. We here at CNBC TV18 had told you first that look out for this, and that's precisely what happened. Why is it important then? Remember when this merger was announced, both those two stocks, they reacted between around 3 to around 5% on the positive side. I remember that was May 8, 2017. We had a couple of brokerages. They were estimating nearly around 300 basis points in terms of margin expansion once the merger comes about. And in fact, CLSA, I remember at that point of time, they turned their rating from sell rating. In fact, they upgraded both the stocks to buy as well as outperform in May 2017. In 2013, remember, the company had announced a bit of a rejig. At that point of time, what happened was, in fact, ACC, it became a subsidiary of Ambuja Cements, and in Ambuja Cements, the parent, their holding went to nearly around 63%. As a result of this, in 2013 itself, the parent had said, we're looking to save nearly around 900 crores in terms of synergy benefits. Now, if you're doing a merger in comparison to what you announced in 2013, how much more incremental savings can you get? Can you even get this 900 crores? That was something that the street didn't have too much clarity about. Now, from May 2017, Anisha, from the time they've announced this, it's not that the stocks have gone up 20, 30, 40%, waiting for this merger. The Nifty, in fact, has gained nearly around 14%. The stocks are virtually unmoved. In fact, ACC is a tad bit lower from the close price that we saw on May 8, 2017. Short point, this is going to be a bit negative for today's trading session, a bit of a knee-jerk reaction. CS, they have come out with a note. They're saying the problem is two brands are existing, and at some point of time, both these two brands are competing with each other. This is what Credit Suisse's note is. Basically, they're cautious on the sector on the whole. CLSA, we have a note that's running on our ticker as well. What they're saying is that out of this 900 crores, nearly around half of that was to come because of change of clinker and cement, movement of cement. So they're saying that anyways, if this agreement goes through what they're talking about, then they could save some part of that. For the time being, the stock will open up negatively. We'll have to see what happens from here.
Okay, so the stock might open negatively. Thank you, Nigel, for putting that into perspective. But we also spoke to Anil Singhvi, the chairman of ICANN Investments, to get his perspective on this statement that ACC has notified the exchanges of not proceeding with the merger with Ambuja Cements for the time being. Listen into what he had to say.
I think there is a bit of a design, so I wouldn't give it by just the business compulsion. And you don't take 10 months in merging the two cement companies which are under your own ownership. Look at how Ultratech was created by Kumar Mangalam Betla by merging the Indian Rayon and Grasim cement companies. So I don't think there is any merit in this whole game which is being played out. I think according to me, there is a bigger design to frustrate the minority shareholders. I think both the boards have failed in really coming out to a much better plan for the minority shareholders.
Okay, frustrate the minority shareholders. That's the word that's coming in from Mr. Anil Singhvi. Well.